Hi, welcome to this video. Date is 11th of February. It's Monday. It's just really a follow-up to our weekly Forex forecast we did yesterday. We're saying generally we're dollar bullish, okay? And the dollar has moved up quite nicely on the euro, for example. Other European currencies it's been firm on, especially the euro proxies, where it's had a fantastic move to the upside. Also been firm on the commodity currencies as well. But the group where it hadn't really firmed up on yesterday when we were doing our review was the emerging market currencies, i.e. the currencies that have got really high interest rates on them, which speculators will buy and sell the USD to get the carry. I think today we are now seeing the dollar confirm a move to the upside, and it's going to be a big one in our view. And now, in terms of the pairs we're going to look at, they're more minor pairs, but most traders will have them on their platform. They're going to be USD MXN, USD ZAR, and USD TRY. You need small positions in these pairs. Yeah, volatile trend really well at times. I think we're getting into a good trend now. Really good upside potential in our view. Now, I just want to go through the currencies and the potential upside, give some ideas of getting in to the pairs, entry, stop, and target. Right, what we're going to do is go to the charts and just keep in mind when I'm doing my analysis, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical analysis of 14 major Forex pairs, you can get live access to our member center on the link beneath this video. Right, let's go and take a look at the charts. And the first one is going to be USD MXN.
Right, on USD MXN daily chart, I'm just going to draw my levels in a moment, but just want to go through the sentiment to this pair because it's very important. And, in terms of the Bank of Mexico, the Banxico Bank, the interest rate is 8.25%. Well, that's a really good interest rate if you basically sell the US dollar and pick up the carry. And this move down here, speculators piled in to USD shorts. They've got good capital appreciation, and the carry, even in this sideways period, the carry is helping cushion them, okay, from any downside volatility. But now we've got a big blue today. Now the fall in the USD, nothing to do with the health of Mexico and its economy. It's just to pick up carry trade interest. It's what big speculators do, and they'll do it in times of risk on. And we had quite a firm stock market, quite a bit of optimism about the global economy. But here, okay, market sentiment changed. There'll be no more US rate hikes this year. They've previously been looking for one or two. And sort of people say in the media that will push the USD down, but it doesn't, does it? It goes up, not very much, but moves up from the lows. Now, why is that? Because you've got to look at it in context. The Federal Reserve said they're going to take a sort of wait and see approach on the economy because risks have gone up in the global economy. China, for example, major problems in their economy with their slowing growth, the Eurozone as well. And you've got those ongoing trade talks between China and the US. And a lot of people have been saying, that optimism about them being solved. And I saw a headline on Reuters today that said, they probably won't be solved by March the 1st, which is the deadline. Well, of course they're not going to be solved by March the 1st because Trump isn't going to be meeting the Chinese leader till after that date. We already know that. But I think that's helped the USD a bit today. Now, this is one of my favourite sort of technical setups because what you get is you come up and then you travel sideways. You move into very tight volatility. You can see how narrow the bands are, and you're hanging around the 20-day moving average. Then you punch outside of the outer band on higher volatility, and the level that we gave was through there for fresh positions. You can see we just pushed off the 20-day. Probably don't need that trajectory, but you got good support now here, just below the 19 level. Okay, any pullbacks, breakout point, or the 20-day moving average should hold and stop behind here for us. Where could we go? I would not be surprised to see us move quickly up to this level. There's a lot of carry trade short. Okay, this one is a really popular pair for speculators to have sold the USD in, and then I like possibly a run on to 2050. It's that big blue today that breaks the range, which for me technically are shifting the odds in favour of the USD. So we'll see how this one goes. Now let's go and take a look at the next one, which is going to be USD ZAR. On the chart of USD ZAR daily, now in terms of the interest rate over in South Africa, not quite as good as the Benitsko rate, but still a healthy 6.75. Economy, like all emerging markets, heavily reliant on capital inflows, and the economy is not doing well. Okay, sensitive to risk off, and I think we are confirming a move to the upside today. Now, in terms of just the emerging markets, just going to say this very briefly. I know I've mentioned it in other videos, but little traders don't want to trade these pairs. They want to stick with the majors, okay? But do not look at the pair's name. Look at the profit potential, because these ones, when they get moving, these emerging markets, they can give fantastic profit to risk. Right, back to the chart and the technical levels. Now, when we broke down here, saw the 20-day moving average hold, fell down to support. There's support over there. I'm taking the chart far enough left, but we bounced up. If we're bullish, we always want to see the 20-day moving average give way. Didn't give way here, it's given way here. That confirms for us a move to the upside. We had one candle couldn't get through, that one failed. This one, nice blue going through. I think you've got support at the 20-day moving average, and then you've got support really there. So stop behind 1350. Where could we go to? Just simply because the amount of carry trade short, which we basically looked up in terms of working out what big institutions favour, and not just the South African rand, but the Mexican peso and the Turkish lira as well. There'll be a lot of carry trades, and that points to a big move. 1450, then 15. Nice strong close today. I think we'll be following through. Very attractive risk to reward. It's well over 3 to 1, I think, to the first level, 5 to 1 to the second level. Just a small position could yield really good profit potential in our view. We'll see how this one goes. Now I'm going to go to the last one, which is USD Try, which has got the biggest interest rate carry on any emerging market currency, and it's just shaping up at the moment. Let's go and take a look at it. Okay, we're on the last chart, which is USD Turkish lira. Let's have a look at the Central Bank of Turkey interest rate, a whopping 24%. Okay, now the interest rate is so high because the economy is just doing badly. Okay, the economy is slowing, inflation is high, there's a huge debt load in Turkey. Obviously, I won't go into all of Turkey's problems, but of the emerging markets, it's probably the most vulnerable currency in terms of having a big sell-off. But I haven't seen a big sell-off yet. We saw the USD surge by 40% a while back, came down, went to retest the highs, and then look at the USD just traveling down and then traveling sideways. And I tried a long trade in this. I just basically got caught in the sideways action with the carry eating into my account. So it's one that you want to break quickly now. And I think we're almost ready. In terms of, we draw a support line there. Okay. Got triple bottom. Came back to test it. Bouncing away from it, just sitting below the 20-day moving average. Now, I would just basically, with the emerging markets, I think they're all going to sell off. We've seen the Mexican, the ZAR already. I think that the lira is next. Just want to break of the 20. You could go there. You could go a bit closer if you wanted. and then see if she runs. So this will be your risk, okay? What's your reward? Well, from our research, the big carry trades started to come in as we broke the 6 level, okay? So basically about 4 or 5 to 1 in terms of risk reward. It could go even higher. What I'd like to do, or what I'd like to see happen, is the 20 to get taken and then, yeah, nice blue candle through resistance. I've already got a small trade in off the double bottom. Like I've said, the carry on this one, yeah, it does eat into your account equity. So I'm looking for this one to break hopefully very shortly. So yeah, for me, the emerging market currencies look yeah, really interesting at the moment. And like I said before, you don't need a big trade, you need small trades. Yeah, these are volatile pairs. Okay, you want volatility and you want big trends. And I think in the emerging markets, the US dollar now, yeah, it's been relatively firm on other currencies. I think spring higher, keep going to the upside on these 3 emerging market currencies. Obviously, we shall see. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.